Sometimes you wanna go where everybody knows your name, and they're always glad you came. You wanna be where you can see our troubles are all the same.
Well, good afternoon, everybody. For those that are new here, thanks for being here. Appreciate you chimed in on us this afternoon. Those that have been here all day, you're probably getting really, really, really tired of hearing my voice. Maybe the little coughs I've had, I do apologize for that. I've still got quite the runny nose and scratchy throat. Feel great, just the cold is lingering there. So we'll try to get through today. I'm going to do my very best to keep this way less than an hour. For one, normally I like to do the pinball strategy like this or the rounded bottom breakout strategy. And then I like to look at charts. The problem is the market condition has, what it's done for us is there's just not any pinball setups out there. There's a couple, and we'll definitely take a look at those. But as far as pinball setups for tomorrow goes, they're just not that many. And I'm not sure it'd be great trading anyway. So, but what we can do here is maybe we can be set up for down the road, because it will happen. I mean, the market is not going to continue to go down like it is. It will bounce. It will start to move up, and we will have some pinball trades out there to trade. So, okay, here I am already off subject. Again, I want to welcome everybody. Thank you for being here. A couple of quick things I want to talk about is, please don't get discouraged and leave out early today. Yes, it's being recorded, but right after me and me going over the pinball strategy, Doug Campbell, he runs the Right Way Divisions section of Hit Run Candlesticks, and he would like to come on and share something about the new trade planner that we have. And I'm not going to say too much about it right there. I'm just going to leave it right there. And just remind you that toward the end, if you can hang around, you'll learn a little bit more about the trade planner we have. Okay, let's get started. Something quick about the pinball strategy. The pinball strategy is the strategy. It is the chart pattern that was able to take me from struggling horribly to actually making money, which led to trading for a living. But this was the strategy that did that. I call this my little ATM machine. And the reason I do that is it's great for quick profits, 2 to 3 days usually. Yeah, I mean, if everything's right. Of course, if the market is not right, it might take a little longer. And we're usually looking at, say, that 10 to 20%, probably geared a little bit more toward the 10, maybe say 8, 9, 10, 11, 12% right in there. But I would bet that most swing traders would just be hysterical with themselves if they were able to make that kind of percentage. And this little chart will do it, or this little chart strategy will do it. Also, the nice thing about it is this chart strategy, this setup, comes with rules. In other words, it comes with a plan. It is a plan. So if you were to take this, and just a little, I'm going to go a little off topic here. If you were to take the pinball setup, and if you were to follow the rules, and then enter it in the Trade Vision trade planner that Doug's going to talk about, you've got a darn good game going on here. And you've always heard plan your trade and trade your plan. This chart setup right here will get you started with that, and then we've got something that will even help you further with that. So welcome to the pinball setup / strategy. A little quick disclaimer. Everyone knows that trading can be very, very risky. And, the last thing you want to do is trade with with the only money you have, I wouldn't put that to work for you in trading. If you're down to your last dollar, trading is not what I would do with it. I would do something else. Trading can be risky, and it does take a lot of education to get to the point where you're making money. And I don't mean education, um, expensive education. I just mean time in the seat, working with other traders, talking with other traders, being in the trading room, and being able to share ideas and learn from other traders. That's the kind of stuff that is what I mean by education. So be very careful when you're trading, and past performances are not indicative of future returns. A quick thank you. I want to say a big thank you to Warden Brothers and TC2000 for allowing me to use all their charts. Everything you see today will be from their charts. Anything like that, any coding or whatnot will be theirs or from their program. Um, so just a great big thank you to Warden Brothers and TC2000. All righty. Where are we here? A couple of things. Let's think about the chart setup for this pinball setup. There are 4 basic rules. One, a downtrend. You want to be in a definable downtrend. And what's a definable downtrend? For the purpose of the pinball setup, we want the 50-day simple moving average to be below the 200-day simple moving average. We want the 20-day simple moving average, let's see, it's green usually for me, to be below the 50-day simple moving average. And we want the 34, let's see, there's no orange on here. I don't have an orange, so I want the 34 to be all in a downtrend. The big moving averages we're working with are the 34 and the 200. Mainly, we want everything below the 200. We want that 34 down, and then we want that old T-line, the old T-line. We want it down here. That's what we want right there. And we're looking, we'll talk about that in a minute. But we want that T-line down low, and we want everything in a downtrend. Kind of the way the market is setting us up right now. So this is a great chart strategy in a few days, maybe in a week or two, when the market squares itself away and we start some sort of bounce or relief rally upward. And then what we're going to do is we're going to keep an eye out for bottom formations. We want price to reach a low, stopping. We want to see some price action, positive price action behavior. And we might look at candlestick signals for that. That's what I look for. And I want to look for little patterns in those candlesticks, not just one little bullish engulf or one little Hiromi or even one little low kicker. I don't want to look for that. What I want to look for are double bottoms, low high, higher low formations, bullish reversal candlestick signals. That's always helpful, although that's not absolutely needed. If you're not looking at a candlestick reversal signal, say like a bullish engulf, you can still have double bottoms. You can still have the chart pattern, a low high, higher low, higher high in there. And then what's also nice, what's also very favorable is when you see that price action has been in that downtrend and you want it to bottom out like this. So, if you were to have a big bullish candle right here, and then if you were to have price action, this represents a T-line basically. T-line kind of run up like this. In the meantime, you know what? You could have a candle that does this. You could have a candle that does that right there. And then as price kind of moved along, it can just sort of wobble along and then pop up like that. You could have a signal, right, a pattern right here. You could have a low to a high, and we better make this red, to say a higher low, and then to a higher high, and that breakout. When you see those kind of chart patterns, or even a rounded bottom, those just add tons and tons of probabilities to this trade. Okay, rule number 3 is on day 1, we want the first close to be above the T-line. Now, we're going to look at charts to look at all this as well. I'm just trying to give you a background of what I'm looking for as far as the rules go. So we want the first close to be above the T-line. The T-line, by the way, is nothing more than the 8 exponential moving average. That's all it is. Price closes over the T-line for the first time. Let's call that day 1. And then number 4, the profit potential. We're always looking at the 34 EMA. Now, you can go out there and you can recreate the wheel. Lord, we've all done that. You know, somebody has taught us about stochastics or about RSI or about the cloud maybe. And you know what we do the first thing? We go put all those numbers and all those we set it up like wherever we learned it from, and within 5 minutes we're already tweaking it. Look, I'm like you guys too. I know this. I do this. You tweak it because you think you know more, and you might. No one's saying you don't. Just give it a try the way it is the first time. Give it a try. And once you can work with this mousetrap, then you can go out there and tweak it and make your own mousetrap. But I got to tell you, from the bottom of my heart, this works. And it works because it has rules with it. It has a plan. And if you just follow that plan, it will work. I'm not saying the trade is going to make you money every single time. What I'm saying is you're going to have more winners than losers. And at the end of the day, you'll have more, when the ones you do lose will be small, the ones you do win will be bigger, so that at the end of the week, end of the month, end of the year, you will have profits rather than negative numbers. So we always want to look for the 34 EMA as the target, and it should always be at least 10% from where we enter it. Always. And if it's not 10%, you can fudge on that a tiny, tiny, tiny bit. But the T-line needs to be 10% away, or yesterday's close, day 1. Actually, day 1 needs to be 10% away. So the close of day 1, because what we're going to do is we're going to buy it on day 2, or maybe day 3, day 4, but we're going to buy it after day 1. We're not going to buy it on day 1. Okay, so this is what the chart might look like. And I want to show you the downtrend here. Let me get my little trusty markers out. You can see that this is the, well, you can't see. I'll tell you. This is the 200-day simple moving average. That's the 50-day simple moving average. That's the 34 EMA. That's one of the most important lines on this chart. This is the 20-day simple moving average. And this is the T-line. Okay? So you could actually work this really with only the T-line and the 34. You don't need the 20. You don't need the 50. And you don't really need the 200. Your code that you use to find the chart, it just has to have it built in so you're in a downtrend. That's all. So you can see how we're in this downtrend. We've gapped down. You can see how that we started to flatten out. And you see this little double bottom right here? That's one of those signs I might look for. See this little doji continuation pattern? That's one of the signs I want to look for. And you know, there are some times when you will scan for this setup, and you'll find maybe only 5. Only 5 will show up on the scan. Today, there's only a couple that show up on the scan. And then there's times you might find 30 or 40, 50, 60 that show up on the scan. You're going to have to go through each one of those, and you want to pick out the ones that make sense to you. In other words, can you see the double bottom, the value of that double bottom? Can you see the value of that little morning star right here? Can you see the value of the positive trading on this would be day 2 actually. And what about the value of actually closing up over the 20-day simple moving average as well? That's great value, but that's not something I look for all the time. When I do see that, I pay a little bit more attention to them, but it's not a must to have here. The distance between the 34 and the T-line, or yesterday's close, has to be at least 10%. Here's a little hint. The further it is, the better chances you are of making money. Because what we're doing here is we're putting together an oversold trade. That's what we're doing. We've put together an oversold trade that we all know that when everything gets a little oversold, we have a snap back. And if it's oversold and it doesn't really become bullish, then what we have is a dead cat bounce. That's all we care about. We don't care that this stock goes up here to this price up here. We don't care that this stock continues to run, $5, $20, $80, $100. We don't care about that. That's not what we're looking for. We're looking for that 10+% between here and here. That's it. That's one trade right there. So let me just box that in a little bit. So let's just, whoops, not what I wanted to use. There we go. That's all we're looking for, that move right there. I'm not saying the stock can't go up further. In fact, in this case, I probably would, but it wouldn't change my mind that that would be the target for this chart setup. Some bottom formations that we might look for during this process: double bottoms, a rounded bottom, flat bottom, which a flat bottom, rounded bottom, we're kind of, you're kind of the same thing. It really is. Bullish reversal signals, all the bullish reversal candlestick signal. Belt holds, morning stars, bull kickers, piercing candles, things like that. Hammers with follow through, bullish engulf with follow through. You've got doji bullish engulfs, all kinds of candlestick patterns you can put in there. And when you're able to take a candlestick pattern and you're able to put it in there with a flat bottom, a rounded bottom, or double bottom, or a 1-2-3 setup, which is, I probably should write that on here, 1-2-3 setup where we have a low to a high, higher low, higher high. When you can add a couple of these things and put it all together, you've got the recipe for a nice little profit, very nice profit. So this is what we might see in a double bottom. By the way, these are all pinball setups. So right here, I can tell you that the pinball setup would have been, I probably should use black. The pinball setup was this candle here. I can't tell you exactly where the T-line was because that's not what I'm trying to show here. I'm just trying to show that the double bottom. But when you have that breakout, that would be day 1 right there. This line here represents the T-line, and there's day 1. You can see this long-legged doji here. You can see the high, the higher low, or double bottom, same type of patterns. And now you see that continuation up, and you see the breakout over the T-line. So really what we want to do now is we want to be a buyer on day 2 over here. We'll get to that. This is what a rounded bottom might look like. This is also a nice little W pattern. You can see that bullish W pattern, a low, high, higher low. T-line was about in this area right here. It was inside this candle. So when you see these patterns like this and you start moving over the T-line, that is really something to take a look at. One second. Excuse me, like I said, I'm fighting a cold and I had to clear my throat there. Okay. So we have a little rounded bottom. We also have a bullish W pattern. You know that there's only a handful of patterns like this to keep track of, like a bullish W pattern, doji continuation patterns, what I call a PBO pattern, which is nothing more than a pullback within a nice pattern that leads you to that J-hook continuation pattern maybe. There's just a few things like that. Inverse head and shoulders, we're just looking at the long side of things. Cups and handles, very easy charts to spot. And you really only need to know just a handful. Doesn't take much. A flat bottom, this is what we might look for as a flat bottom here. And then if you start breaking out of this, I can tell you here the T-line was actually up in this area right here. Price came up, failed the T-line, back down, and broke out here. So we start to break out. This is what we're looking for. This might be day one. Well, that would be day one, I guess. And now what we're going to do is we're going to look to buy it over here, not necessarily on day one. I'm not ruling out buying it on day one. You can buy it on day one. You just have to follow the same rules. If it was to close below the T-line, you want to be stopped out. We'll get into the closes here in a moment. Lower highs, higher low sequence. And that really is where we start to build a little bit of a trend. And, if we're in a downtrend right here, let's make this red. If we're in a downtrend right here and then we come up into an uptrend or a high, we make a high and a higher low. See how we're a higher low off this low? When we start doing that, that's also one of those things you want to look for. And if you can get that as we cross the T-line, see how right here, looking at that candle, we're down. See the bullish engulf. We continue up, and how we fail the T-line. We come back, and we actually make a higher low right at support. Right at support. And then we start to break out, and we move up. There's day one right there. There's day one right there. Where would this be a buy? I'm going to go into day one, and I'm going to draw a line right at that top, back down to about right here. So yes, you can buy it below the T-line. There's nothing says you can't. Where the change comes is at the end of the day, it must be back over the T-line. Otherwise, you have to be out of it. You have to be. See how this candle here peaked its little self down here, right? Pulled itself right down into that box. That's where inside this candle, that's where you want to be a buyer. The reason you want to be a buyer is because the T-line is going to be your stop. So what we're trying to accomplish here is we're trying to buy a stock that is oversold to the 34 EMA, to the point where it deserves a snapback. Okay, snapback to the 34, and we're going to buy it as close as possible, usually within 2% of the T-line, because if it closed below the T-line, we're going to be stopped out. So if this day here, if we did buy it on this first day, and the second day, say you bought it right here, well, yeah, let's not buy it on the first day. Let's buy it on the second day. You bought it right in there and it closed down, then you really should close it out. Because what it means is this chart pattern isn't ready to move up, and it could easily come back, in fact, too easily, retest those lows. Remember, we are in a downtrend. You're for a reversal, a snapback reversal in a stock that's in a downtrend. So yes, you're going to go out there and you're going to catch a falling knife. But you're going to catch that falling knife after it's hit the floor. Let's say that's the bottom. That's all you can see here, so we'll just call that the bottom. After it's hit the floor, after it's made a high, after it's made a higher low, and after it's broke out of the T-line. So right here, if we were to draw some lines on this, from this low to this low, these are established. I'm not making these up. They're established already. If we were to draw a line there, and if we were to use this high and come over here to the candle that we have, previous, and run it up, you can see that from this point backwards and from this point backwards, what we have here is a trend starting. So yes, you're catching that falling knife, but on the other hand, you're catching it off that bottom. You're not trying to pick this bottom is what I'm trying to say, because the bottom has already been made as far as this goes. Now, I'm not saying this is a bottom that's made and it's going to run for 180%. That's not what I'm saying. All I'm saying is we have a little bit of construction down here, and what we're looking for is a 10, 15, maybe 20% move to the 34. Here's some candlestick signals that you want to be aware of: the bullish engulf, the hammer, harami, kicker, piercing candle, tweezer bottoms, morning star, belt hold. These are candlestick patterns that I would look for in that chart pattern here. And here's something else too. Let's draw this like this. Say you have a doji, and then say you have a bullish engulf. And we're going to assume that we've been in a downtrend here, okay? 34 is up here, T-line is up here. Say you have something like that. And then say price, and here we have our bullish engulf, okay? Say price does this. Then and you know what? Let's even bring it down below that low right there. Let's get crazy with this. And it starts moving up and back and up. You have to remember that bullish engulf is still there. It's still there. You know, when I first started trading, I certainly read my share of books on candlesticks. And after going back and rereading them after several years and learning about candlesticks a little bit, I started reading between the lines a little. And I wish there was a way to put it in a book without the book being about 1,000,000 pages long and tell you about every little scenario out there. But when I read all the candlestick books I read, which are all great, by the way, I'm not beating the books up. I think they're fantastic. I can even recommend a few of them to you. But when I read them so that, okay, a bullish engulf, what I have to see is positive trading the very next day. That's the way I read them. That's kind of the way they read too. But after you study candlesticks, you go back and reread them, you actually can see what was really meant. You really can. So what I'm trying to say here is, if you have a bullish engulf right here, and say it doesn't follow through, that doesn't mean that bullish engulf has gone away. It doesn't mean that at all. This chart can sit here and go back and forth several days and start back up, and it starts to break out of that bullish engulf right there. You've got a bullish engulf breakout. You do. And that's what I would look at. So when I see a chart in a down pattern like this, and I see something like a doji bullish engulf combination, and if it doesn't work out right away, and the T line, let's put the T line in here, yeah. So it doesn't work out right away. That's okay. Man, this thing starts to break out, break out, break out, break out. There we go. Break out right here. I'm looking at this as we now have a rounded bottom breakout. We're over the T-line. We're coming off a bullish engulf. We've got a nice little pullback. Maybe we want to call it a little rounded bottom in there, call it something. But it's great consolidation, and the bulls are starting to take off here. This is what works. So don't look for candlestick signals and think that everything has to happen at one single time. In other words, that you don't have to have the candlestick signal bullish engulf crossing over the T line with the 10% to the 34. You don't have to have all that at one single time. Little helpful hint right there. Let's see, where am I? How come my chart's not changing? Uh-oh. What's going on? Seriously. Seriously. Oh, okay. Maybe I fixed it. Now I need to find where I was. I apologize. There we go. Okay, a quick little summary. And I'm going to go back and I'm going to look at a chart. I think there's one, somebody gave it to me here, and we're going to go look at it. I've got two that we'll look at in real time, and I'll definitely dissect those for you. Definitely dissect them for you. So a real quick summary. We're looking for a stock a chart that's downtrending, and we're looking at a daily chart, by the way. I always get asked, does this work on intraday charts? Yes, it does. Yes, it does. Just remember that a few things may be changing. In other words, we're looking for 10% minimum on a daily chart. Do you think that would work out on a 5-minute chart? I think not. I don't think you're going to see the T-line and the 34 giving you 10%. Not on a regular basis. Not on a regular basis. So you have to, if you're going to scale down, you've got to scale everything down. That's important. Just like if you're going to do this, will it work on a weekly chart? Absolutely. But you might want to scale things up a little bit. So we want to make sure that we're in a downtrend. We want those bottom formations. We want to look for those reversal patterns and reversal candlestick signals. They do not have to be in conjunction. They do not have to be at all. You can have a reversal pattern and not have a candlestick signal in sight. You don't have to have a candlestick signal to make a very, very good chart pattern that can make you tons of money. In almost all candlestick signals I'm not careful how I say this. If you see a candlestick signal, say a bullish engulf, I would bet you within the next several days you will see a candle or a pattern, what I'm going to call a pattern. Remember, the first day you want it to close over the T-line, and you're basically buying the second day. You can buy the third day if you want. What you're doing is you're buying very tight the first day to the first day's candle, above or below the T-line, but it has to close above the T-line. That's a must. And then you always want at least 10%. That's important, that 10%. You always want that 10% to the 34. And if you have 12, that's better. If you have 20, that's even better. If there was 20% between the T-line and the 34, what are the chances are it actually makes it to the 34? Slim to none. Think about that. That's a long road to travel. So our goal here is to make a very nice profit in a very short period of time. Kind of like walking up to the ATM machine and plugging your card in and pulling out a few $100. Very quick, very easy. Day two is the entry day. Day one, price needs to be above the T-line. Day two, I would prefer to buy it above the T-line. I know that, by saying you can buy it below the T-line, but it has to close above the T-line, there's probably people out there already reworking this mousetrap to find day one closing above the T-line, day two closing below the T-line. Trust me, that usually, more times than not, doesn't work out. You want it to stay above the T-line. If you can buy it above the T-line, I personally think that's better. Who cares about 0.5%? It just doesn't matter. When you exit the trade, you want to exit at the 34 EMA. We're also going to look at exiting on a 60-minute chart, which is very important, which I'll go over here in a minute. So exiting the trade, you want to exit at the 34 EMA. I'm one of these guys that I tend to take most of my profits And then there's guys out there that or gals too. It'll hit the 34 and it looks great. Everything is singing sweet. Hey, I'm not going to sell anything. I'm just going to let it work. But you fail to put a stop on, or you fail to raise your stop. You go get a cup of coffee, you go to lunch, I don't know, you pick up the phone, you come back and look, and all of a sudden, hey, where'd my money go? That's because you should have took your profits at the 34. At least take 50% of the trade. Please always take at least 50% when you tag that 34. When I say a close below the T-line, I'm not looking for an intraday stop. I'm looking for a close at the end of the day. What it does intraday, for the most part, I don't really care. I really don't care. Now, if I see it running below the T-line and the market is tanking as well, it doesn't take a brainiac to figure out this trade's not going to work. So yeah, close it out. Be done with it. But when it comes to intraday noise, I don't want to be stopped out intraday. In fact, when I'm stopped out intraday, I always take a very hard look at that trade. What did I do wrong? Those are the trades that I probably pay the most attention to than anything, because I want to know, why did I get stopped out? Am I being too tight with my stops? Because that's the last thing I want. I mean, we don't go into trading wanting to get stopped out. I mean, I don't walk up to people and say, hey, here's 20 bucks. Hey, here's 50 bucks. Man, I do that to somebody, I'm afraid they're going to turn around, look at me and say, here's your sign. And I'll feel like a real Dumbo. So the last thing I want to do is get stopped out. Stops are for protection. You do want a safety stop. You can always place your stop somewhere below the T-line, giving it enough room that intraday won't touch it. And if it does touch it, you may have a problem anyway. Many times, the stop below day one is where I want to look at. And I want to look at the previous day. So if day one was the first close over the T-line, I might want to go back and look at, day zero, I guess, one day back. Maybe that's where I should put my stop, is somewhere in there. You want to give yourself room. I'm not talking about a 10, 15% stop. That's not what I'm talking about. But you don't want it at a 0.25% either. The trade entry. Here's that same chart we looked at earlier in one of the earlier slides. And you can see how we came up. See how we failed right up here with a little shooting star? Here's a little tidbit about candlestick signals. I get asked often, maybe we're looking at this and we're talking about going long, and somebody points out, aren't you concerned about that shooting star? Not in the slightest. No. On the other hand, if this was a chart that had been up, and if it gave us a shooting star here, yes, I would be very, very nervous. But down here like this at the bottom, no. Candlestick signals, when they're not, say, I'm going to use the words oversold and overbought. I am not using any kind of indicator to describe that. Okay, I'm not using that at all. I really could care less what an oversold indicator or overbought indicator is telling me. I don't look at those. They have no value to me. If a chart's been up 10 days, I don't need an indicator to tell me it's oversold. If it has a two-day low, I don't need an indicator to tell me that the stochastics is rolling over below 80. Vice versa. If a stock is oversold, and if it's been down for 10 days, and it starts moving up, I don't need an indicator to tell me that it's moving up through 20. And I don't know why people need that piece of information, but we do sometimes. Some folks do. So I look at this and I see that shooting star. I say, thank you. Thank you for giving me this trade, because what that shooting star means is profit taking coming. And we have the profit taking, we have the double bottom, we have the morning star signal, we have, look where we could have bought it. I hope you guys can see that. It's already lined in there. Look where you could have bought it, anywhere in there, and look at that trade. Man, that's nice. That is really, really nice. What a great trade. What's the chances of it going straight up? 0 to none. You know, more than likely it's gonna move up. It might consolidate and move up. When we get to that 34, you want to take that money, at least 50% of the trade. Remember what we're doing here. We're making the 34 and basically the T line oversold with each other. We're stretching them out so there's a ridiculous amount of percentage. And I've discovered that 10% is kind of the magic number for the minimum. You can't have too much. You can't do it. But for the minimum, I want more than 10%. So I'm looking for, in fact, I think the way my code is written is for 13%. You know, I just picked a number in there, a little bit above 10. That gives me a little buying room. So I don't have to be right on the money with the buying. I just know that if I'm looking at a chart for the first time, if it shows up on the scan, well, there must be 13% there. So that means I know I've got a couple percent here to work with. It just saves a little work. I want to talk about that 30-minute chart. And please make sure when we look at a live chart that we look at that live as well. I want to look at that 60-minute chart, and I want to look at that 200 period moving average. So here is a snippet of a daily chart. That's the same chart we were looking at. There's your shooting star. Here's our pullback. So what I'm looking for is minimum of 10% to the 34 EMA right there. This is the daily chart. Here's the 60-minute chart over here. See that little dotted line up there in the corner? That's the 200 period moving average on the 60-minute chart. Now, what I want to do is when I spot this chart, on my screens, I already have a 60-minute chart set up, so I can see it. It's not something that's shown in the trading room unless I pull that chart down into the camera. It's on see monitor number 6, and it's there. All I have to do is look at the daily chart, glance up. I can see, there's the 200 period moving average. So what I want to do is I want to take a note of what price that's at. 29.78 in this case. 29.78. So I want to come back over on the daily chart, and I want to know where 29.78 is. I want to know where that 200 period moving average is. In this case, it's right there. Notice it's below the 34 EMA. So what that's going to do is that's going to change my target. My target will no longer be the 34. My target will be the 200 period moving average on the 60-minute chart. Now, I never have to look at the 60-minute chart again. I'm going to put that line right there, and I never have to look at this again. Doesn't matter. All I'm doing now is I'm changing my trade so that it's still a pinball setup, but my target has gone from the 34 to the 200 right here. The reason why is because of the name of the chart pattern, the pinball setup. What I have found is I'm going to start over here. So, yeah, I'm going to start over here. We have a pinball setup. We rally to the 34, and it comes right back down. We rally up. Whoops, wrong color. Don't want that color. We want a rally color. There we go. And then it might pull right back down. So when I first discovered this and started using this, this reminded me of a pinball machine. You know, that ball just going boink, 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 back and forth. Well, before I learned how to make money with this, what would happen is I would be nice and green on this move. But do you think I would sell it up here? No, I wouldn't, because I wanted to get greedy. We all want or all have a greedy side to us, all of us, and that's okay. We just have to control it. So this thing's moving up. I see all kinds of candle patterns. I see a chart pattern. Hey, the market is roaring. Whoa, why would I want to get out of this thing? Let it go. Turns out I never made any money in it. Why? Because I never took my profits. I kept letting it work, and it would come back. And then what happens is, what if it doesn't work? Remember, this is just a dead cat bounce. That's all it is. We've got a stock here on a serious downtrend. Serious downtrend. And and so the best you can hope for until you have a chart pattern that takes you out of of that bottom, the most you can hope for is just a little snapback dead cat bounce. Snapback dead cat bounce. Boom. So make sure you take those profits. The 100, the 200 simple on the 60-minute chart, I found to be one of the biggest culprits of that. Price would come up to it, and for some reason it would just pull back. What do you know? Do you know that it wasn't too far after that that I learned how important the 200 period moving average is on all intraday charts? I have it on every one of my intraday charts. It's the one consistent on every intraday chart, 200 period moving average. Okay, so I think we covered that a little bit. What if the 200 was above the 34? Then the 34 wins. Then that becomes the actual target. Here's what I mean by a stop on the close. I don't want my stop. I don't want to set my stop where that little red line is. I don't want to do that. Because how do you know that from here it's not going to start moving back up before the end of the day gets here? Apologize for that little pause. I mean, how many times have we been stopped out to find that this candle ends up closing up and maybe even closes up like this, and you just feel like you've been kicked. You've just been kicked. Not only were you down, but you were kicked. So that's why I don't like to set a stop too close. On the other hand, you probably want to set a stop, a protective stop. Let's take the pinball strategy out of the picture. Where would you set your stop? Right here, or a little lower, actually, I think. How about, we'll give it a little room. How about right there? That's just a protective. That's a whoops, just in case. That's a whoop. That was a way too long of a bathroom break, and look what happened. So let it work. At the end of the day, if it closes under that T-line, stop yourself out of it. Be done with it. Because as good as this bottom might look, and to me this looks absolutely fabulous, that does not mean that chart can't turn and head down lower. In fact, if you think about it, if we come from a downtrend, and if we were to move sideways, I'm just going to draw straight lines. If we move sideways, what have we got here? You've really got a bear flag. That's what you really have. That's why it doesn't pay to try to pick bottoms. It just does not pay. And that's the last thing you want to happen right there. So always have the protective stop on there. And if you close below that T-line, make sure you take those profits. Or I'm sorry, you get out of that trade. And there, I guess I forgot this slide was on there. That's where my safety stop would be, right there, right at the low of that doji. Because if it started cruising below that, we got a problem. We have a real problem. This bottom means nothing if we start cruising below that line. Quick little summary. We want to make the trade on the second day. I sometimes make it on the first day. I know a lot of people that sometimes do that. The pinball setup was designed to make the trade on the second day or even the third day, mainly after day one. That would be the big thing, after day one. Because day one is like your guideline. That's your rules right there. Your rules start with day one. You can't buy this trade until it moves over the T line. That's day one. So everything is off of day one basically and the T line. You always want to exit your profits at least half at the 34 EMA or the 200 period moving average on the 60-minute chart, whichever is lower. Hey, don't forget, Jim, maybe in a few minutes, when I finish up here, you can post your link in here. Jim puts out a a pinball, I'll call it advisory. Basically, it's a stock list of pinball setups, I think you sign up for it, and he'll send that to you. We're looking to be stopped out on the close, not intraday, but we do want to be stopped out with a close below the T line. I usually look, that 30 minutes, 15 minutes before the end of the day. That's where I make my decision. If it's below the T line at 15 minutes before the close, look, you can get on one knee, you can cross your fingers, you can say a prayer, you can do what you want. It's not moving up past that T line if it hasn't done it already. So go ahead and take your loss. It's a small loss, and let's move on to the next trade. Always put a safety stop in place. Always put that safety stop in place. Like, we looked at that chart. Where's that chart? Like this chart. You have to look at the chart, determine to where the safety stop is, or use the low of day one. Use that low of day one. Now, something just came to mind here. What if day one looked like this? How do I do this? I'm going to say day one, and we're still 10% below the 34, okay? So, well, you know what? I'm going to redo that. I can actually do what I want to do, and I don't have to do that. There we go. Put your stop below day one. Do you think seriously I'm going to put my stop down here? No. Let's use a little common sense here. No, I'm not going to do that. Geez, that's got to be 20% down there. No, I'm not. So I'm going to go back and I'm going to take a look at what the next candle's doing, the next candle. Maybe come over here and look and see that low over here. I might come in here and say, okay, maybe depending on the size of that loss, I might put a 50% line on that candle right in there. And that maybe is where my stop is. So, hey, George, no worries. Yes, this is being, I have a recording of it, beloved George. Yeah, you'll get a recording, one way or another. So the safety stop, hard stop below the T line. Here's the chart GLF. This is not recent. This is old. But whoops, what did I just do? Start carried away here. There we go. You can see how we've been in a downtrend. The T line is oversold to the 34. You can see how we come up. Oh, look at all these days. What if you bought it on this day? At one time, that candle was up there. At one time, this candle was like this right here. You don't want to be buying this and then let it fall back down, because how do you know it's going to find support here? So that's why you've got to make sure you see that close, and then I always put a buy box on there, and I want to buy it anywhere in that box. I don't chase price inside the box. If you want to chase price inside the box, just make your box narrower. Just do that. I want to be a buyer here, and I want to be a seller up here at the 34. Here's BBEP. Look how we've been in a downtrend. Look how we bullish Hiromi, and we start setting this little pennant in here, which this is actually a bear setup, isn't it? Isn't that a bear setup? But what changes it? What changes it is we had the follow through right there. That changed it. That changed it to bullishness. So that's why you've got to be very, very serious about you're trading off the bottom, which means you're trading in a downtrend. You're trading the counter trend. So make sure you keep those stops in there. Don't, if this thing starts moving down, don't make excuses. Well, that's going to be my stop. That'll be my stop. Well, that'll be my stop. You could go on a long time doing that, and before you know it, you're having to explain yourself to somebody why that is, why you will let that happen. Look at that chart there. That's what we call a cradle pattern, by the way. I should probably put that in the list of candlestick patterns. Very nice bullish pattern. Get that bottom right in here. Could it have been bought here? Absolutely. But that's a different trade. We're talking about the pinball setup. First day, look where you could have bought it on day 2. The thing about this is, here's what happens to most people. They put the plan together. You know, you got day 1, and the market closes. You've had dinner. You sit down at your desk, and okay, let's look for some trades for tomorrow. You find this trade. You put this box in there. All right, I'm going to buy it in there. You put that price. I'm going to buy it at that price. That's what I'm going to do. Yes. Hey, this is a nice chart setup. So the next day comes. Here it is here. It opens up high. That's what that candle looked like. Excuse me. That's what that candle looked like. And do you know that most people won't buy it now? And I challenge you to buy it. That's right in the area you said you would. So if you have a plan, stick with your plan. That's important. Stick with your plan. Because when you made that plan, you also said, I'm going to have a stop about right here. Maybe a disaster stop, but if it closed below the T-line, by the way, the T-line would not be up here. That's not the T-line you want to be using, because what happened on this chart, this is a chart I think went up higher, and that's why the T-line is bent like that. So you want to take that in consideration. This is where the T-line's at. Stop below the T-line. Set your plan up and trade your plan. If your plan says, I'm going to buy it in here, then buy it in there. Buy it. Okay. I want to thank everybody for being here. If you are interested in learning more about the pinball setup and the strategy, I do have an ebook on it. The regular price is $97.47. If you were to buy it, if you go to the website, sorry, I don't have a link here in front of me. I'll grab that link for you real quick. I'm going to put this right there. This takes you to all the ebooks. Find the one that says Pinball Setup. If you choose to buy it, it's a $24.37 savings. Use discount code MPD25, capital M, capital P, capital D, 25, and it'll automatically calculate the invoice to 70-some dollars, a discount of $24.37 if you're interested in doing that. I want to say thank you very much. Thank you very, very much for taking time out of your day and being here listening to the webinar. Don't leave. Doug is going to be coming on in a few minutes, and he's going to be talking about our trade planner that we have, and I think you'll want to hear that. But I did say I would look at a chart or two. So let's look at a chart. Let's look at GNC. That's not a pinball setup. Let's go look at CLF. Here we are. Look at CLF here. And by the way, CLF is the only pinball setup that has come up on my scan tonight. I did a really quick scan right at the close, and that is the only one that's there. So you can see how we have a downtrend. See how we have the downtrend? See how the let's make sure here. So that's about 14% from the T line. See, from the T line right there up to the 34. At a little over 16%. 16%. I don't want to see a show of hands, but just to yourself, how would you like to have 16%? Real simple. See how we've started to bottom out right here? Look how you can just see how the bulls are buying down here. Look how we have this wick down here, almost a bullish engulf. Well, it is a bullish engulf, by golly. We have a bullish engulf with follow through. We have a pullback. This, by the way, would be this would be the first day. There's the third day. So you could have bought this anywhere in here. It can still be bought. We're still looking at that 14%, over 10% up there. So how would I set this trade plan up? I'm going to come over here and I'm going to use today, and I'm going to move this over like that. And I want to buy this right there inside this area here. Now, let's just, we don't know exactly where we're going to get it. So we'll just take a $1.63, 73. That's 14.5% to the 34 EMA. Let's come over here and let's see, can I use this chart? I can. Make sure that's an hourly. The 60-minute, excuse me, the 60-minute 200 period moving average is sitting at a $1.90, $1.92. So let's come over here and let's make sure we know where that is. Oh, see here? So now after setting up my trade plan, I've got to ask myself, is this a worthwhile trade? Is this worthwhile? It's right at 10%. That's what we asked for. That's all we want. That's what we're looking for. So I mean, because of the way this chart pattern is built in here, because of these legs down here, I would look at this as a buy tomorrow or over the next couple of days. I would set up that trade plan that way. I would set it up so that I'm a buy somewhere in this area here, and I take my profits at that $1.90, $1.92, 200 period moving average on the 60-minute chart. And interestingly enough, look where it's at right here on the chart. So that even just gives me a little bit more confirmation. I better adhere to my plan. I'm just drawing this out to here's a 3-day chart. Here's what a weekly chart looks like. What's that weekly chart? Weekly chart, the 200 is at $2 anyway. So anyway, let's see. Somebody said BPT is a pinball. Let's see. And then what I'm going to do is get out of here because I've spent your hour. I've spent your hour. And there's still more to come. It is. That is, let's see, who put that there? Ed, yes. Very nice. Ed and I may have something different in our code. Let me run my scan again. Nope. See, I still didn't get it. So we may have something a little bit different in our code, some little tweak somewhere. But look at that. Now let's do a trade setup here. So real quick, I want to know what the 60-minute 200 is. 2706. See, there's the problem I have with this one. We're not quite there. But I got to be honest with you. I would probably eliminate the pinball rules. I would not trade this as a pinball setup, and I would trade it on its own merit. That's a very, very nice chart. I just can't use pinball rules here because it doesn't meet the qualifications. That's part of trade planning. If it doesn't meet your qualifications, you shouldn't be trading it. You should only be trading charts that meet your qualifications. This one is knocked out by that 200 period moving average on the 60-minute chart. So, but outside of that, that's a nice chart. I'm going to be hard-pressed not to be buying this tomorrow, but I won't be buying it as a pinball setup. Okay. CLF is, let's see, yeah, NSPC or NSPH. There were a lot of stocks under $1, but I eliminate anything under $1. So, all righty. I want to thank everybody for being here. I truly do. And once again, I want to say if you're interested, this is a good deal in this ebook. Comes with video, the whole 9 yards. This is the setup that took me from pretty much a hobby to actually making money. And hobbies cost money. Definition of hobby is something fun that you pay for. So for quite a few years, I did something fun that I paid for, and this was um, the the strategy that made the difference. And actually, it's because of this strategy and the rules built in it that so many other things, um, like the rounded bottom breakout and so on, is set up very similar uh, rule-wise, same design anyway for the rules.